Welcome back to the channel, Thesaurus Trader Said. So before Monday's opening bell, let's look at what the market is actually telling us instead of predicting what we want it to happen. So let's begin with our learning video. So if we look at the broader structure on a monthly time frame, the first thing I want you to notice is that we are currently in a consolidation phase. And the major supply area, which I have already marked here, is around the levels 26,350 and 25,750. You can see the major demand area here is around the levels 22,350 and 21,300. After this bullish phase, we are currently in a consolidation phase, and until we get a decisive breakout above the supply zone which I have marked, or the breakdown of the demand zone, I would continue to treat these areas as the major boundaries in the market. So now let's move one step lower and look at the weekly time frame, because the monthly charts tell us where we are, but the weekly charts can help us understand what prices are doing inside the range. So now if we look at the weekly time frame, so the recent price action that we can see here is, first the market made a high at around this area, which is nearly around 26,300, and from the high we can clearly see the lower lows, lower highs, lower lows, and again the lower highs around the area 24,600. Now after making these lower highs, the market tried to again continue the pattern, but ultimately we can see that the market has failed and we saw a pause in the downtrend. Now this is the part where I will be emphasizing on, because from here onwards the market tried to test the previous lower highs, and we are currently trading back to the 24,600 resistance, and that makes the current price extremely important, because this is where the market has a chance to change the market structure. So we saw a downtrend which was supported by lower lows, lower high, lower lows, lower high, and right now the market took a pause somewhere above the lower lows, and currently we can see that the market is again trying to sustain above its previous lower highs. So based on our weekly analysis, rather than describing Nifty as strongly bullish right now, I will prefer to say we are more into a recovering stage, or we can say that we are currently into mildly bullish phase. And until we get some further confirmations in upcoming week, we will keep our stance as mildly bullish for now. So the weekly time frame has also defined one more important level for us, which is 23,070. So if the prices get rejected from these areas, and if we continue to proceed towards downside, and in any case if we test the 23,070 level again, we might trigger some bearish cases into the market again. So now we know something very important. The first is that the monthly chart tells us that we are still inside a large bullish consolidation, and the weekly chart tells us that the short-term structure hasn't completely turned bullish yet, but still we are into a mildly bullish zone. So the question now becomes, what is happening between these two time frames? So to understand it, we will look at the hourly time frame, and this is where the pictures start getting interesting. If we go back to the previous price action, we can clearly see a sequence. Here the market created a high at 24,600, and from here onwards we can clearly see a sequence of lower lows, lower highs, lower lows, lower highs, and again lower lows. So during this phase, sellers were clearly maintaining control of the short-term structure. Now from 23,070 level, that is from this area, we saw a change of structure. That is, the market tested its previous lower highs. Then there was this big consolidation that happened near the break of structure area, followed by a bullish confirmation. So on short-term time frame, which is of 1 hour time frame, we can clearly see that the market is in bullish phase right now. Now it is important to note that a break of structure on short-term trend doesn't necessarily mean that the entire market has suddenly become bullish, because as we already see that we are still below the major weekly resistance, but also we saw that the sellers are no longer controlling the hourly structure in the same way that they were doing earlier. So now that we have completed our top-down analysis and we have made some conclusions, let's move on to the most important part of the video and look at the 3 scenarios for the week ahead. So the only 3 possibilities or scenarios which we need to look forward are: the first scenario is if the market keeps consolidating at these levels and then followed by a breakout above. The second scenario could be if market gives a retracement and then a continuation of the upside. And the third scenario will be when the bears take control. So the only possible scenario when the bears will be active now is if will happen only if the market falls at least 70 to 80% the nearest support area, which is 23,600. So if the market falls or if the market tests these levels, then bears might again control the market and we might again see some bearish movements in future. To conclude today's video, my overall bias is still bullish, and my preferred scenarios are the first two. The target we might see on the upside is around 25,300 to 25,350 levels in the upcoming sessions. And if you enjoyed the content and found this analysis useful and easy to understand, make sure to like the video and to subscribe the channel. So thank you for watching. I'll see you in the next one. Siddharth here, signing off.